Welcome, everybody, to our monthly market update with Murdock Manwaring Company Real Estate Group at Keller Williams Realty East Idaho, where we talk about what happened last month, April 2024, in the real estate market. Let's dive on in. Oh, by the way, we are covering Bingham, Bonneville, Fremont, Jefferson, and Madison counties, which is Southeast Idaho. And if you love this material, please make sure you're subscribing and liking, depending on which platform you're watching this on. And if you would like to get this in your email, head over to viewidahofallshouses.com/newsletter.
Nice. Thank you, Jessica. Let's get right into the details. There's one slide we like to start with, and that has a lot of information. It talks about home sales, the prices, new listings that came on the market, what interest rates were last year compared to this year. This is everything just the month of April in 2023 to the month of April in 2024. And so how are we comparing for that month year over year? And if we look in the sales, last year we were 130 and this year we're 134. So we're up a bit on the number of homes that sold. Average price says that we went down 1.6%. I think that's probably more of a reflection of the upper end is slowing down quicker than the lower priced houses. Does anybody have a take on that?
Yeah, I think that when you look at just month to month, you just got to be super careful just because one big sale can skew. So don't take it as the whole market is down there, but definitely, yeah, we could have one, last year they could have had a $2 million sale and that really gives us another $6,000 for sure.
Yeah, I'd say the takeaway at 1.6%, we're pretty flat on pricing. So anyway, Zach, go ahead.
Yeah, what I was saying is I think at least with all the buyers I've been working with, what I've been seeing is 90% of them are under that 450 mark. And what we're seeing as you get closer to that 450, there's a lot less traffic there. But as you get to the kind of 350 and below, it gets a lot more competitive. What we're actually seeing, and I've seen this on probably 3 deals over the last 2 weeks, is that 350 and below, we're actually getting back into the multiple offer situation because a lot of those higher price point buyers, like we've been saying for the last year, are getting driven down by those rising interest rates. As you see right on this slide, last year compared to this year, they're still up. And so affordability is down. That's something that we were talking about earlier this morning that we'll probably cover a little bit later in this video. But those lower price points are getting more and more competitive. And so that's kind of where you'll see that home prices, a lot of the concentration is down low rather than up high.
Great point. Yeah, and people that have hesitated and that have stayed in the market and not purchased are now competing with the brand new buyers that are entering the market, and so demand is increasing, and especially that first time home buyer range has quite a bit of competition. We are seeing last year compared to this year on new listings there. Last year we just had 181. This year in April we had 210, so that did go up, and that does help with that. But look at days on the market, went down, and so things are moving quicker, and we have more inventory, and we're seeing things really move because as the interest rates are just kind of becoming the new norm, right?
So I think my theory on this is as we move into what I call the spring selling season, those sellers that didn't want to move in the winter, they don't have to sell, so they waited. And so they're starting to enter the market with new listings that you'll see more people saying, I didn't want to move in the snow and now I'm good with that. And also I think the sellers are adjusting the rates and buyers are adjusting the rates. So maybe last year they were waiting and were thinking there was going to be this big change in interest rate. And they're like, it's probably not going to change. And so they're entering the market, which will drive, inventory up, hopefully. But I think there's been buyers that have been waiting to enter. So I think we'll start to see, I don't know that there's a big, huge change, but I think the spring selling season has begun.
Yeah. Nicole, go ahead.
I know with my clients, they were hoping that interest rates would drop and they were wanting to shop at a higher price point. So my folks that were up in the 700s, they're like, I'm going to wait for the interest rates to drop. I'm going to wait for everything to come down. And they're just not, and they just can't wait anymore. They
Yeah.
just are ready to go. They're like, you know what? I'm just going to drop my price point. I'm just going to compromise because I was hoping to get that, that better house at a lower rate. But now, I'm just going to kind of go with, instead of at 600, I'm going to go, or at 700, I'm going to go down at 600. And then they're ready to pull a trigger right then instead of waiting. I think there was just a lot of buildup. And now they're like, I'm just going to go with 6 and we're going to pull the trigger.
That's the predominant story, Nicole and Jeremy, is honestly, we haven't seen rates go back to the 3s. We probably won't. And so it's really, we hear it every single day. I'm just going to wait till the market gets better. I'm going to wait till the interest rates get better. And it's really just, how long are you willing to wait? How much are you willing to lose? And we're finally starting to get through to a couple people, and we're seeing that now where people are like, hey, we got to go, because the longer we wait, the more we lose, the worse position we're in. And so we're finally starting to see that, and that's why it's picking up.
Yeah.
Yeah, and I think that 3%, I mean, the only reason why we saw 3% was they were trying to save the economy from when it was falling before.
Mhm.
And the only reason we'll ever see it again is if we have the same situation and no one is hoping for that and no one's expecting that. So,
But I also don't think they were happy with the results. They dropped it, and looking at inflation and things now, I don't know if they'd say that's the solution again.
they waited too long for sure. So,
Well, let's
And
take a
I
look
think
at it. Oh, go ahead, Nicole.
one of the thing with what Zach was saying, that I think that they have finally learned that they were hoping, but now they're in reality. We were hoping, and now they're just like, yeah, it just is what it is. And I want to buy a house instead of throwing away money from rent. I just want to quit losing money. They're like, I should have bought 2 years ago, so I just can't wait anymore. Woulda, shoulda, coulda.
Right. So here's Jefferson County. The number of sales went down. We had a bit of increase of inventory. Look at days on the market. It's taken a little bit more time. Instead of trending down on days on market year over year, we're seeing that increase. And then we're seeing some higher priced homes because their average now in Jefferson County is 525.
it's crazy.
And when you have that few of sales, a big sale. So what I have a theory on this days on market, because you use all of the information from this month. And so 91 days, I bet they had a big sale. There was, of those 30s, there was 1 or 2 big sales. Price went up, and it was probably been on the market a long time. And that drove the days on market on the closed sales up.
Yeah. I wouldn't say the market's getting that much hotter in Jefferson County, just some big sales. And they have some really nice homes in Jefferson County along the river, and they're higher priced, and they sell. So
better sampling in Bonneville County, where we have 134 instead of 5 in Fremont County. 23 in Jefferson County for that month, 21 in Madison. And so those other numbers kind of skew that. This is an interesting graph because we've seen over the last few years contracts falling out, right? Like buyer and seller finally come together on a house. They negotiate price, they get in there, and then before closing, something happens, and we saw in 2022 quite a bump on contracts falling out. Well, we're getting back to the normal on that as well. That before we get into contract, we're actually more committed and getting back to the 12 to 15% range, which has been really good.
I think this termination chart is really great to see. It's not like we've had a huge change. Look at it's pretty consistent. And when you see a jump, it's probably interest rate based somewhere in there, 20, something happening in there. Otherwise, it's a pretty consistent termination percentage over time.
Yeah.
But I hate that number. I hate that number because it still seems like that shouldn't be that high. I mean, 15% of all contracts, 15 to 20% are falling apart. I mean, I don't think we see that, even close to that with our team. And so it just depends on some of the things that, do they really need to be falling apart? So it's a frustrating number. So
how about the expired or withdrawn? Somebody says, I want to sell my house. I'm going to put it up for sale. 2010, look at how high. Almost 80% either expired or withdrew from the market. Where in 2021, we saw the lowest number of everything was just selling, right? So we saw a bit of an increase over the last 3 or 4 years, and now we're trending downward again because as the market tightens up, we get into a different selling season. Homes are selling, and sellers are getting more realistic up front on value as well, right? Not overpricing. So
I wonder if that can also speak just to the quality of realtors, Jeremy. You know, because if we think about it, how easily is your realtor going to be able to sell your house? What kind of expectations are they setting up front? How are we coming into the game right out of the bat to get it gone as quick as possible, get you the best deal and do the best job for you, rather than just kind of throwing it up on the MLS and hoping it goes. We'll slap a price on it and away we go. And now we're waiting, you know, a year for it to sell, rather than, you know, kind of our track record where we're getting them gone in a month or two.
yeah,
Yeah.
that's a good point.
Yeah. Having being able to
Yeah.
have an agent who has a hard conversation with you, if they're willing to say things you don't want to hear, that's the agent you should hire.
Yeah. Look at the new construction. This price point of 350 to 4 is what we have been talking about. That is where the big concentration is on new home builds, right? And if this continues on the trend, it will be double what it was last year in that price point. It looks like we're compressing. The lower end is going away. The higher end is compressing down and into that first time buyer market of 350 to 4 to try to meet the demand. Is that what you guys are finding as well on new homes compared to existing?
Kind of an interesting scenario, Jeremy. A couple months ago, I was talking to Rockwell, who obviously sells and builds a tons of homes in the area, and they went through a week where they sold every home they had that was under 400,000. It's like 40 homes went under contract in 1 week, and they're building right now. Everything's up over 4 now. So there was like this rush in the springtime to get all those other homes, but just an interesting place in the market.
That is interesting, yeah. So compared to existing home prices, that, you know, they're all over the place, where we still have a bunch of homes under that. And so really what pulls the value of existing home prices is new home prices, right? And so when there's a diminishing return for square footage in the price you'll pay on a new build, where you can get a bunch of square footage on an existing home, maybe double for the same price. So there's always that balance pulling upwards toward that new home price. Here's
and I think
really
also
cool
going back
stat.
to that is
Nicole had her hand up there, Chad.
Yeah,
Sorry.
go ahead.
I had an interesting stat as I was reading about real estate nationwide. Idaho has the 3rd biggest size of homes. So new homes, they're building them bigger. So Utah has the biggest square foot. And then I think the other one might have been Nevada or something. Irrelevant. Second place was irrelevant. But we have the 3rd biggest square footage of houses in the United States. So
Wow.
even though we're at the national average for price per square foot, they feel a little more expensive because our houses are just bigger. So I have some folks moving from Florida, and they're kind of like, why the heck are your houses so expensive? And I'm like, well, this is the average and this is the national average, but our houses are bigger here in Idaho.
That is interesting.
The biggest in the nation.
Yeah. Yep.
Go ahead, Chad.
And I was just going to point out, it just kind of shows kind of the sweet spot for homes. If you want to sell and you want to have the best response, is that 300 to 550 range. I mean, you're going under there, it's not many. You're going over 600,000. You know, you have a lot more competition, and that's with the new construction and existings. I mean, that's where the most people are moving. So,
You know, we have these conversations with sellers right now. When you get into the price point with an existing home that you are competing with new construction, you have to have, that's a different conversation. When you get to 500 to 600,000, we have to say, okay, we've got a home, but remember, they have 10 homes that are brand new with completed basements. When you get under 400, a lot of them have unfinished basements. So existing homes are competing with unfinished basements. But you get above 5 into the 6, you're competing with finished basements that are brand new. So about the only difference is a yard or those kind of things. And sellers have to realize, I think that's a hard point in the market right now. There's quite a few available. And if you're a seller selling in that market, it's hard to compete with brand new construction when you can't say, well, the basement's unfinished. No, it is finished at that with a 3-car garage. And so Sellers have
Yeah.
to know they have to be in great condition to compete with new constructions and that price point.
Yeah. Well, look at inventory levels over time, because this is interesting. 2021, man, hardly any inventory available, and we feel like there's still, you know, not many in certain price ranges, and that's what we're seeing with that 10-year average, if you or more. But if you look at 2010, man, tons of inventory available. And so we're still sitting at a low inventory, and we talk about that balanced market where we want 4 to 6 months of available houses for the absorption rate, but we're still quite below at 2.5 months of inventory in this market. So it's still leaning towards being a seller's market, especially in certain price points.
Well, you've got a really lot of inventory upper end, above 900, to see 15 and 18 homes available above $1 million in the whole market. That's a heavy, and that's actually in a buyer's market. When you hit 800 and above, you're actually in a buyer's market.
That's
And
right.
so it's pretty heavy up there. So even looking at our inventory levels, we're still pretty low.
I have a lot of buyers who are on the fence. So they want a house up in the 5s, and they're kind of like, oh, there's a ton up there. And I have all of these options if I jump up to 556, but I'm down here at 450 and they're just snatching them up. They're disappearing. I'm like, yeah, that's just the hot spot. So if you want to jump up another 100,000, you've got a lot more options, but down there, you know, below 500, they're getting snatched up fast. So that's interesting, that just that line between buyers and sellers. And I find that's a really popular line. People just don't want to go over 550. Just the certain amount of buyers. They're like, oh, I'd really like this. I'd really like 3 bedrooms on the main and 2 bathrooms on the main. They just can't quite pull the trigger over 500. And so,
Yeah.
and there's just less houses like that staying on the market. They're just popping underneath there.
That's right. So crazy things happening, good things happening. Looks like the, you know, rates did take a little bit of a turn downward for the first time in weeks, probably months actually, right? And so we may be seeing a little bit of loosening up there, but still feels pretty good. There's solid inventory in certain price ranges. What's final take? Anybody want to say some final words and we'll wrap it up?
I
say
have
a
the low
pretty
prediction.
stable market. Pretty
Yep,
stable
stable.
market.
And I would
Let's hear your
say
prediction.
if you think you're going to wait and it's going to get better, prices are starting to come up.
Yeah.
Rates are not going to dive. It is, you're going to be, everyone who's waited so far for the winter is not happier that they waited. And I think it's going to be the same. It's time to get into the market.
Competition's
Yep.
hot. I visited with my lender this morning. He's like, interest rate is at 7 1/8. That's today.
Yeah.
Just
Well, I will
like
tell
we said at
everybody,
the beginning, how much are you willing to lose? How long are you willing to wait?
And with that, we are done. Thanks everybody for joining us. See you next month.
just a reminder, if you would like to receive these and even more stats, we have lots of more charts and things. We will send them to you in email. Just head down to viewoutofallshouses.com /newsletter /. But if you just go to our viewoutofallshouses.com, up at the top, it says get the newsletter, and we send all these to you and there's even more to be had.